We are live, RTD Live Talk, Detroit's #1 late night YouTube talk show. Excited to be back for another live stream after a long weekend. Hope everyone's doing well. And as always, want to check in and see what's going on with you and also share with you an interesting paper done by Assistant Vice President of the Federal Reserve of St. Louis, and how he's basically saying that in order to have a full V-shaped recovery, the Federal Reserve will need to go negative, as well as the government, the United States, needing to roll out some extreme fiscal policies. So one of the things where we're in for a wild roller coaster ride, but yet once again, we already knew that, but it's just interesting to hear an economist, PhD economist, write it up and basically tell us to it straight up. So that being the case, hope everyone doing well. As always, let me know where you're watching from in the chat. Definitely love to acknowledge your presence. Thank you for joining us. And want to find out what else is going on out there amongst all types of other stories we can get to as well. So I'm going to start off by just thumbing through some of the articles I want to share with you, and then also share that paper done by the PhD economist that encourages negative rates. And of course, whatever the Fed wants, they get. So it's just a matter of time. And so we'll talk over that a little bit and then move on. So we got the New York Redneck. We got Excalibur, Spirit King. It says, been busy with two baby mamas. Glad to be back. Well, it's good to have you back, my friend. Hope everything is well on the home front. We got Didi Prepper from Eastern North Carolina. We got David from Quebec, Canada. Cool shirt. That gold is trippy. Thank you, my friend. It's just the green screen effects. Anthony says, no one cares what's going on. Says he's running things. Caveat Tour. What up, Mike? Nick, hey, all. So, yeah. So, man, there's so many stories to pick from. But I thought I will stick with one that I've mentioned several times before. But it's just interesting to hear how negative interest rates from Jerome Powell, what was it, 2 weeks ago, was off the table. You know, we've done our research, and the board doesn't really think that's an effective policy, But then we have a paper done that says that it's good. So we all know that it's not good, but yet in a desperate attempt to save this current monetary experiment, it's inevitable. And so the reason I wanted to bring it to your attention, outside the fact that amongst all the things that we're being distracted with, we wouldn't necessarily hear that as a leading story on all of the financial news sources. But I think it was hidden more so. I only saw it on one source. Could have been on more, but CNN Business happened to mention it. And so I actually thumbed through the paper, and it looks like the PhD economist laid out a pretty good case in referring to the response to the Great Depression and how FDR did a great job of creating a S-shape recovery that led to a V-shaped recovery. And they did it through spending funds that they didn't really have. So that being the case, what else we got here? Says Tang says broke. Hey gang, what's up? So how's everybody doing? So I'm going to actually get right into the articles, and then I'm curious to find out what else is going on out there that you might have come across news-wise, article-wise, and also what's the pulse like in your neck of the woods? I'm assuming pretty much most of the cities, major metropolitan areas around this country, as well as we're seeing now in Europe, they're starting to march or whatnot, all in the name of Black Lives Matter. So a lot of developments on that front there. So we can touch on that if you guys want to. And then I open up the phone lines, and then we can dive into a lot further from that. So I'm going to pull up here on the screen so you guys can see what I see, and share some of my thoughts on it, and point you back in the direction where you can read it for yourself if you want. But here is the article I wanted to lead off with tonight, and I'll just thumb through it. Then I want to share more of his paper that he put together last month that encourages his fellow peers to consider going negative. And so this is an article here. Says Fed economist pushes for unprecedented rate cut in the United States. So I'll scroll down here and give you a little bit of what's on the surface, and then you guys can read more for yourself if you want. And so it talks about here, Jerome Powell has repeatedly resisted pressure to slash interest rates below zero. The Fed has already launched trillions upon trillions of dollars in stimulus. And it says, but some economists say it needs to consider sub-zero rates to achieve a sustainable recovery. And so that's one of the things that stood out to me when it said sustainable recovery. And so as of now, based upon last week's job numbers, we all know the real deal about that. It's the new narrative of we're recovering. Businesses are opening, and I also have an article here about the now 11 Main Street or the 11 lending programs and some details on that and how ultimately the Federal Reserve is setting up small business owners to basically lose their businesses with these lending programs. And I'll touch on that a little bit as well. But it says to achieve a sustainable recovery. And then I'm going to dive deeper into what he means by that. But it says here, researchers for the St. Louis branch of the Fed wrote in a report last month that the combination of aggressive fiscal and monetary policies is necessary for the United States to achieve a V-shaped recovery. And so I was wondering, what exactly does that look like? And so here's a quote. It says, aggressive policy means that the U.S. will need to consider negative interest rates and aggressive government spending, such as infrastructure. And so if we wind back 3 years ago now, when President Trump ran for office, he was saying how, look at the lack of care that's been provided for our roads and bridges, and we need to invest into this great economy or this great country of ours. And in order to make America great, we have to have the infrastructure needed to bring back jobs and to open up plants and all that stuff like that. And then also President Trump went down about the last year, putting pressure on the Federal Reserve to go negative. And so according to the paper that I'm about to read now, it looks like it's suggested amongst the PhD economists that going negative would be a good thing for the economy as well as aggressive monetary policy. And so I'll actually open up that paper right here. And so I'll put this in the chat if anybody has interest in just reading what a PhD in economics would bring you to suggest as a good model for our country, given the fact that we're already at a quarter point interest rate. And typically, we all know based upon prior recessions, you need about 5 complete points to actually even address a recession, nevertheless, a depression. So what it's looking like as of right now, not only will they have forward guidance and basically telling the markets what's going to come, they're going to have the controlling of the yield curve, long rates. And then also as a result of that, once they realize that really didn't work, once we all realize that it doesn't work, then they're going to go negative. So those are 3 things we're pretty much guaranteed it's underway right now, on top of all the stuff happening with those lending programs, which are a bunch of nothing. And so let me check in via chat real quick. It says, hi, Mike, a negative rate denotes a failing economy, in my opinion. Yeah. And so, Dexter, one of the things is that based upon the response from what happened as of last September, when we just talking about the repo side of things, the credit, the open up a line of credit for all those financial institutions, that's even ramped up even more since then. So economy, in March, when the first 6 lending windows open up and quantitative easing became official, that's pretty much when the economy really, went under, and negative interest rates will be the icing on the cake, I believe, as far as how it will further rob savers of the national currency. And so let me thumb through this real quick. So this is a nice lengthy article or paper done here by, I'll actually show you who Ji Wen is. Let me see if I clicked on this and you get a chance to see this PhD economist for yourself. And so here we have this gentleman right here, Mr. Ji Wen, assistant vice president. And he has his PhD in economics from the University of Iowa. And so this is a list of all his papers, but he's an assistant vice president in St. Louis. And this is what his paper, it gives some details building up, comparing the last Great Depression, saying that based upon the pandemic could result in an economic decline that rivals the Great Depression. It says there's no doubt that the fiscal monetary stimulus is beneficial. However, it still may not be enough. The goal of effective policy should be more than just getting gross domestic product back on track. And then he goes into how that is comparing to the whatever. And then I'll save all the boring stuff and get right to the bottom. And it says lessons from stimulating the economy. It says using these historical examples as motivation, he developed a model, better understand. It says, importantly, these policies also need to continue even when the crisis is about to end, provide a further boost to little. And so where it go? It says, I found that the combination of aggressive fiscal and monetary policy is necessary for the U.S. to achieve a V-shaped recovery in a level of real GDP. Aggressive policy means that the U.S. will need to consider negative interest rates and aggressive government spending, such as spending on infrastructure. And so he basically finishes up with saying that unless, it says, if the U.S. fails to have an S-shaped recovery, then the economic consequences of this current pandemic will be permanent. So in other words, if the United States government and the Federal Reserve do not go this route, this current situation we're in now will be long lasting. And so with that, lets us know that what we're experiencing now, we're going to be in this for the long haul, because there's no way that the Federal Reserve can take their foot off the gas, therefore incentivizing Uncle Sam to further go into debt, therefore deficit spending and all the things that go with that. So thought I would get that out my chest, and because I remember, everybody in their right mind kind of know where this is heading, but it's just interesting and somewhat entertaining to hear a PhD economist also confirm what we all believe was already inevitable, just because that's the only way they can continue to keep this thing going, is to further incentivize those to go into debt, especially Uncle Sam. So buckle up, people. Buckle up, people. And so let me check in via chat. As always, we're going to open the phone lines up in a minute. I'd love to get your thoughts on this matter or whatever else you guys want to talk about. Jesse James says, negative interest rates equal banking downgrades. Can't say I won't miss Jamie Dimon. Okay, and so speaking of the banking situation, here's another article that I would like to put up here that further plays into, let me see if I can find it. It further plays into what we're going to see with the restructuring of the current banking model. And let me see if I can find this article here. It talks about, it was from Forbes as of today. Let me see if this is it. Nope, that's not it. Let me see if I can find it. It was a very good article. I meant to touch on it, but let me see here if I can find it. Is it kind of makes that? Nope. Let me see. I'll see if I can find it. But it was an article that came out in Forbes today talking about the dangers of the current policy that's coming, where China, being a lender to our great country here, will be forced to further their push for the digital yuan, and eventually derailing or dethroning the king dollar. And in doing so, that will cause problems once the Federal Reserve decides to get into the banking for consumers such as you and I, and deposits and whatnot. So I believe the long-term goal, based upon all the policies and all the things that's coming, is to basically get rid of commercial banks, because there's no real need for commercial banks in an environment where the issuer of our national currency happens to be a privatized central authority. And then on top of that, the too big to fail banks are shareholders in those same entities. So no matter what, even if you do away with all the actual brick and mortar stores that we do our commercial banking with, they'll do away with the fractional reserve lending model, but all the funds will still flow through the Federal Reserve. And so you got JP Morgan, Goldman Sachs, and Wells Fargo, all those with the top 7 globally systemic important banks. They're still shareholders in the Federal Reserve, so they stand to profit even more, because they can minimize their overhead costs by closing down all the buildings and laying off all the employees that work for them, and just focus on further using the digital, whatever they want to roll out, and basically reaping the rewards of the Federal Reserve continue to do what they do now, but yet providing all of us, all 300 something million people, with a direct deposit account at the Federal Reserve in the e-dollar. So I believe that's what's on the front. Ms. Raham, it says the SDR, is it fiat currency? Is the IMF transitioning to a digital SDR currency? Great question. And so I would imagine, I haven't done too much investigating on the latest news on the SDR, But knowing that the IMF, BIS, World Bank, all those entities, they have something up their sleeve. So I wouldn't be surprised if the SDR happens to be digital in nature, but comprised of a lot of other resources. I'm not sure if they're going to actually decide to put the e-yuan, the e-dollar, and the e-euro, because all those national currencies as we know them now, as all this unwinds, will be under a lot of pressure to where I don't think they'll be able to really, do much with those things as far as confidence and purchasing power. So I would imagine gold will be an equation. Not sure how. Some people think that the cryptocurrencies might be rolled up in there, Bitcoin or something like that. Not sure, but I'd imagine that a part of the plan, whether it's plan A, B, C, one of those plans has something to do with the SDR. Now it's a matter of, how governments tally up and are able to regain trust in lending amongst themselves, unless gold is in the equation, I imagine. What else it says? It says part of the Monopoly takeover is to flood the system with the USD. Brando. Yeah, and that's and so I think flooding the global economy with dollars is their way of trying to prop up as well as buy time, but also weed out the old system and transition us into the new. And so I'd imagine, based upon what China's doing now with their push to roll out their e-yuan or digital yuan at a faster rate than they wanted to, I'd imagine they want to have that digital platform mechanism up and running so that eventually, by the time the U.S. get on board, because the U.S. as of right now, unless they actually have something in store for us, which I imagine they're trying to get the Congress on board with that. That's a part of the whole Boost Act. And the Congress looking to provide direct payments to the public, given this whole pandemic lasts another 18 months or whatever they want to say. So I would imagine either the Federal Reserve will begin announcing, like I mentioned a couple months ago, the Federal Reserve will have to start announcing something in the form of their next preferred payment vehicle, especially how they're going to transact with the public pretty soon in competition with what China's doing. And so it's that, I don't think the U.S. want to be the last one to jump on board with announcing their digital dollar, whatever it's going to be called, as they shift power from the commercial banks and into their hands. And whether or not the Treasury rolled up into it, not quite sure how that's going to play out. Die to the moon. Yeah, I think, as a result of what's going on, everything that has monetary properties will be going to the moon as well. XRP has third-party risk in it. Once again, a lot of commercial banks and the too big to fail banks are all part of that XRP project, to my knowledge. So it could be a backdoor for themselves to get out and to get into the digital world solely. So I wouldn't doubt if it pumps as well. And so what we're going to witness is, because of inflation picking up, because of the excessive liquidity that's going to be flooding the planet, all those things, I believe, will actually increase in nominal value. Now it's going to be a matter of what we begin to price goods and services in outside of the Federal Reserve notes, because that's what's going to be going downhill starting this summer, pretty much. It says, Brando, Mike, that's a scary picture. It is very scary, but Brando, do you feel a little more comfortable in knowing this type of information well ahead of the masses? Because while a majority of the world is out there concerned with a variety of other issues, as I always mentioned before, just focus on what's being constructed around us and what we're being ushered into. It'll help you bring things into perspective, I think. So having a heads up as to the fact that negative rates is kind of baked into the cake, according to the Economist, that pretty much mentioned that there'll be no way of having a recovery, a sustained recovery, unless the Federal Reserve goes negative, as well as Uncle Sam becoming very aggressive in his borrowing. So we're going to have the only lender, which will be the Federal Reserve, and the biggest borrower, which will be Uncle Sam. And in the middle lies the people. We are the sheeple in the middle, for whatever that's worth. Johnny says, rules. A lawless people basically now apologize for being negative. Let me see. Rules. A lawless people basically now. What do you mean by that, Johnny? Elaborate a little bit more for me. Crown BTC said the E-dollar will be very not crypto positive. Stellar BTC die. Crown BTC, everyone should be careful with buying and selling crypto. I had to pay a hefty tax for my trades. Really? Yeah, I never was into the trading game. And so more of the buy and hold and sit on it and let it do what it do. And just, my thing is always from day one, ever since I started this rethinking the dollar concept, was just to be patient, use the current Federal Reserve notes to your advantage, enjoy this current time as best as you can, and just let Uncle Sam and the Federal Reserve do what they're going to do, which is ultimately, fail. And along the way, drag a lot of people down with it, but that's unfortunate. So anyway, I did enough ranting so far. Let me hear from you guys. What do you guys want to talk about outside of the subject matter at hand? Give me a call. Let's talk about it. Won't be on long tonight. Just want to check in. And for those that might be coming in a little bit late, what I basically started off with was just sharing some things that I thought was worth bringing to your attention. And so here is an article here from CNN Business that I caught earlier. Says the Fed Economist pushes for unprecedented rate cut in the United States. And it's a gentleman by the name, I'll show you a picture here. It's this gentleman right here, Mr. Ji Win, a PhD economist who's assistant vice president in St. Louis. He mentioned that basically the only way for there to be a sustainable recovery is negative rates and aggressive fiscal spending, preferably in infrastructure. But I imagine it's probably going to be some infrastructure spending as well as some MMT, helicopter money, and all those things that we were expecting will be coming. And so here's the actual paper that he wrote here, and I put it in the chat for those that want to read it. So just thumb up, or I'll put it here. But it was just interesting to hear a PhD economist earn his salary and telling us something that pretty much everyone you kind of know already. So that's all we talked about. And then I also got an article here talking about how the Fed has expanded their Main Street program. And, one of my concerns with that is it looks like small businesses, if you take out one of these loans, is being offered by the Federal Reserve, it is more than likely, depending on what sector you're in, if you're struggling now, I would imagine you're probably going to even struggle even more in the days ahead. Therefore, you will not more than likely be able to pay that loan back within the 4 to 5 year window. And then therefore, you run the risk of losing your business or becoming servant, even more so, to the lender, which happens to be the Federal Reserve. And servant are always subject to their master's orders. And so at any minute, the Federal Reserve could change the game on you and you're at their mercy. So it's one of those things where this whole idea of a recovery, a V-shaped recovery, or whatever the size is going to be, is not really manageable. It's not doable, because in a debt-based society, unless more debt is being taken out and put to good use, then there's no way of actually continue to move further with growth, as they like to say. And so therefore, we're going to be in a very problematic environment for some time to come. And I was reading an article, what was it? I think it was yesterday, about so far, based on the last 90 days, I think it could have been global, I think, there was a total of $30 trillion lost due to the closure of businesses, the debt defaults, delinquencies, all those negative consequences of shutting down the economy, on top of all the losses from the pandemic itself. And so it takes, on average, I think it was about $8 trillion. $8 trillion is what the actual revenue from those industries or whatnot was making, would have made in a healthy environment. And so the only way they can make up the difference between that 8 trillion and the 30 trillion in losses is more debt. And so the gist of the article was that 30 trillion has been lost, 8 trillion what's usually made. That difference will have to be created in debt, or plus some. And that's what's going to be needed to even think about trying to stabilize what's going on. So I don't think it's going to happen. Let me see here. JJ says, RTD, don't you think the health scare and the riots are all distraction from the coming economic crisis and dollar reset? JJ, 100%. 100%. I know that I knew all along. We all knew all along that there was going to be some type of diversion of our attention to look here while they, basically rob people on that side. So I do believe that, and a lot of people, we've mentioned that for several years now. Hello, caller. What's your name? Where you calling from?
Hey, Mike. It's Brando Commando. How you doing?
I'm doing good, Brando Commando. What's on your mind tonight, my friend? What are your thoughts about just negative rates and beyond?
Well, shit, man. If it's negative rates, I'm going to borrow $5 million at least, I think.
and that's one of the things where the negative rates, even in that little paper that the PhD guy mentioned, he said that it's designed to incentivize people to borrow. Now it's just a matter of, who's going to lend it to you, because I'd imagine the banks and the Federal Reserve are going to be lending to their boys first. And so getting a business loan or personal loan may not be on their radar because they don't want you to profit or benefit from it. So, we'll see though. But what else is on your mind?
Oh, it's never going to happen. Well, Mike, I was listening to you last week, and everyone was calling in, giving their 2 cents on if these riots were going to lead to anything productive.
Yeah.
And I think I heard about 10 no's. I don't think I heard any yeses.
Mm-hmm. Okay, what you got for me?
I was thinking about it. I'm like, there's got to be at least a positive, right? So, I've been talking to some people about the positives and negatives, and most people haven't been very happy about the riots. But one thing I can say is that it's definitely landed on everyone's radar,
mm-hmm.
and it's kind of definitely knocked them off base a little bit, and maybe has shaken up the normalcy bias.
Yeah.
And maybe people have realized, like, everything isn't so cushy and snug as they assumed it was.
Yeah.
And that maybe they should be like cleaning their house up a little bit more.
Yeah. Yeah, I don't doubt it. So definitely it's getting a lot of people's attention, but also it's that's just on the social side of things. We're being confronted with older issues that's always been there. And now, I guess, with the continuation of the protests, a lot of people are demanding change. And so we have now, politicians talking about defunding the police. So imagine, if you're in law enforcement and your department or your city runs the risk of losing some funds, and how much incentive will you have to really protect and serve at that point, given the fact you may not get paid as much or lose some benefits. And so go cause problems. And then what else we got out there? All types of suggestions, but that's just one.
So I think here's what it boils down to is you can easily say it's a trust issue.
Yeah.
And it's a trust issue across multiple sectors, right? So you're losing public trust in police,
mm-hmm.
losing public trust in leadership or the government.
Yeah.
Losing trust in the financial system and the banks.
Yeah.
You're losing trust in the healthcare professionals, like that WHO, CDC hoax we all been dangling from.
Right.
I mean, so trust is out the window, right? So so what can you trust? So people start looking towards their close friends, their family, their community. And if you're going to defund the police, you know what? I think I'm just going to have to step it up and just carry my Glock with me.
Yeah, I imagine you won't be alone.
Everyone's kind of being more responsible and taking some extra effort in the community.
Yeah.
I don't know. I mean, I think that during the riots, if people encountered a personal security force at a shopping center,
yeah,
I think that personal security force would be just fine.
Yeah, and so I saw some but a video about Minneapolis, how more people in the community are now defending their own, and the National Guard and the law enforcement they're allowing people to protect their own property and whatnot. So, hey, that could be a positive movement in the right direction, but we'll see, because this whole riot and looting was all a part of interior diversion tactic to further cause division in our country. So I think there's going to be some more coming of some other magnitude. So I don't think it's over with yet.
Exactly, and shows like yourself and other social media outlets have exposed those agent provocateurs right quick.
Yeah.
I mean, they didn't really get over on us at all. I mean, we sniffed those fuckers out pretty fast.
Yeah.
So I think that's what I mean by when, just trust in general is gone. Even when people see things, they're like, what the hell is a pile of bricks doing here? Something's not right. So I feel like people are catching on, real fast.
Right. Hey.
And they're sharing information real fast.
That's good, man. So we got to keep it moving. I think.
Go ahead.
Yeah.
I think we can do something about this. And like you said, just the fact that we're in the know is going to cushion the blow a little bit. But I agree with you. I think 6 months from now, we're in trouble.
Yeah. Whew, we're going to have our hands full. But hey, let me get some more calls. I appreciate your calling as always, my friend. Thanks for calling in.
Likewise, Mike. You too. Have a good one.
All righty. Good call there. Hello, caller. What's your name? Where you calling from? Hello?
Hello, are you there?
Yes, I am, sir. What's your name? Where you calling from?
Hey, in Illinois, I don't know how it is in other states.
Mm-hmm. Yeah, go ahead.
I don't know how it is in other states, but in Illinois, you could serve 8 years. You could serve 8 years in Illinois and as a politician, and you could get a pension for life and health care.
Yeah. I will probably say that's probably everywhere. I think that's politics in general, more than likely.
Well, I mean, why isn't nobody protesting about that stuff? If I work for 8 years somewhere, do I get that?
Right. So that's the political reform we need. So social, political, and monetary all in the same. Financial, we got a couple of things we got to work on. So, but most people right now are not concerned with that because that's not been brought to their attention.
I am, because it's my taxes.
Right. I understand that. So, I mean, we need to incorporate a couple more things into the protest, probably.
All right.
All right. Appreciate you calling, man.
All right. Thank you.
Yeah. Oh, man. Good stuff. So okay. So here's a question we thought there. So we have active participants now daily. I want to say here in Detroit, it's going on, I think, 10 days, if I'm not mistaken. And so what I'm witnessing in my area is that pretty much every suburban area now has had some type of walk where, I get a notification saying your city here, your city there, we'll be marching or walking, whatever. And so after the couple of events downtown Detroit last weekend, to my knowledge, everything's been relatively peaceful. And so I'd imagine, and what I'm hearing on social media is that the goal is to keep this thing going as long as possible until there's actually some changes brought about. And so it looks like, based upon what I've gathered so far, the Democratic Party is looking to lead the charge with some policies and whatnot. As I mentioned earlier, defunding the police. And just earlier today, I saw a picture of, I think it was a House representatives all kneeling with the African garb on, and I'm thinking like, okay, what a political stunt that looks like. So, I think reform. And so, okay, so reform, restructuring, is that all in the same, or what are some things that we can continue to bring to the public's attention? Because outside of the social issues we're having, social/racial issues we're having, majority of the population is marching. If they only knew that there's a couple other things they should add to the list to really see some changes, I think they'll be more satisfied with just the prosecution of some crooked cops here and there. And so I don't think it's going to be on the radar no time soon, because that's one avenue that the powers to be would not want the people to get a hold of. But I think it definitely will be worth mentioning out there. But what do you guys think? Let's talk about it. Give me a call. Let me check in via chat. As always, if you guys are enjoying the back and forth, don't be afraid to donate a thumbs up in the chat or beneath the video. And so Indigenous says, RTD, do you think the bankers are financing the movement and will be benefiting from the lending to the businesses who have been damaged and looted? Whew, okay, good question. So banks are financing the movement. I don't think the banks are directly financing. I think there are shield organizations, people like Soros and whoever else out there. There's other people who have benefited off of destruction because it's very profitable. And so I don't doubt that like the funders and the backers of Antifa, and even there's some funding for the Black Lives Matter programs as well. So all those organizations, they're funded by, I would imagine personal families or just other organizations. So I would say it's the banks, but I would say it's certain individuals that make sure funds are set aside for movements, and so that they can disrupt and cause a scene out in the street, social atmosphere, as well as in the political realm, for their own benefit. And so no doubt a lot of the activity we're seeing now is very timely in nature. not only, did we have the banking issue, the financial system underneath the surface, which is having problems, but also I think outside of the social and racial issues, we're clearly right now in a political war, and it happens to be presented to us as a left and right issue. So you have Trump, who's nobody cares for on this side, and then you have the Democrats that's lost all type of, their core root backers happen to be the African American community, with the whole Me Too movement from a year ago, where a lot of people woke up and realized they've been drinking the wrong Kool-Aid, or drinking Kool-Aid in general that wasn't designed for them to drink. And so it's the whole tug of war back and forth. Who's going to win? Who's going to do that? And so Democrats are deliberately, shaking up some things. They don't have a viable candidate to really pose a threat in November. And so between now and November, that's what we got. We got June, July, August, September, October, November. So next 6 months, 5 to 6 months, give or take. My personal opinion, as I mentioned this on the live stream on Saturday, is that the pandemic was strike one, designed to derail Trump's great economy. He's saying we got the greatest economy, this or that, whatever, all a bunch of hot air. But according to the polls and the statistics, he was favored. Okay, sure. And then you have, on a global scale, to hide I heard one commentator mention the global sovereign debt bubble. All governments, for the most part around the world, their balance sheets is just overflowing with debt, and it's beyond being paid back. And so they need to basically restructure how this monetary system operates. So here we have strike two, which happens to be the pandemic. And so the pandemic is impacting every country. There's going to be a whole types of health regulations, the push for the Great Reset done by the IMF and all that other stuff coming. And then strike three was, it's supposed to be the lockdowns, or step two is supposed to be the lockdown. And so whatever that strike three is, to derail a second term for President Trump, it's going to be something that we're going to experience, I believe, personally, within the next 6 months. A lot of people have had on the show mentioned that it's going to be a market correction. The last guest I had, John Finnick, was saying that pretty much every election cycle, every presidential election cycle, you see some ups and downs, and it either is for the president or against them. And I'd imagine we're going to see something against the president, which is going to be very disastrous. Hello, caller. What's your name? Where you calling from?
This is Tony from Detroit.
Tony from Detroit. How you doing, my friend? What's on your mind?
I was calling. In my opinion, I think this is a setback for the powers to be, because we already knew they wanted to run up in Venezuela, and then they wanted to get on China about Hong Kong. So now with this, going on with the Black Lives Matters, they can't just run into Venezuela now saying we want to help Venezuelan people when we have our own crisis here. So I think this wasn't nothing planned. It was just, bam, it just happened. Yeah. I think this is a setback for the powers to be, in my opinion. This wasn't planned at all. It's just something that just happened. Yeah, in my opinion.
Yeah, and hey, I wouldn't say that's too far fetched. That's very likely. And so it's one of those things where, apart from trying to put all the pieces of the puzzle together, that makes sense, like it could happen. And so once again, we're all in a very unfortunate position right now, on the majority of us anyway, because unemployment still 40 million people, reopening businesses, a lot of businesses. So even if you've been responsible, you've done everything you're supposed to do, you had a thriving business prior to being labeled non-essential. You shut down. Now, can you pick back off where you left off and continue on? Majority of businesses will not be able to do that. So it's a very interesting times we're in, my friend.
So keep up the good work.
Appreciate
Mike.
you, my friend. Thank you for calling in.
Okay, thank you.
Be
Bye.
good. Yeah, man. Good stuff. So, and that's one of the things, and so that plays very well into, some commentators that say, there's the good guys, the bad guys, and the good guys are winning. And, I'm not 100% sure how the good and bad how we as a people, we in the middle can really say the good and bad is winning, because in the middle, the good and bad are fighting, and one of their tools happen to be our currency. So as a result of all this back and forth, all they're doing, only thing left and right can do is just spend more. And the Federal Reserve is just going to create more. And the people in the middle, gonna have to work more or earn more and lose more. So yeah. Anyway. Yeah. Jonathan said, "Did you see Nancy Pelosi kneeling?" Yeah, I saw that, and it's one of those things where here's a question. Apart from, let me actually pull it up because I was very when I saw that, I was very disturbed because here we go once again. All I saw, what stood out to me was a photo op. This is a great chance for. Uh, so here we have Nancy Pelosi and end of fashion diplomacy. And so once again, like, okay, who coordinated this? Was it their PR people said, hey, let's right now is a great time, because we got Joe out there, Sleepy Joe, he may fall asleep. So let's go ahead and try to, so this right here. So where has this been all along? Where has the recognition of the issues that's been plaguing this country for centuries? Where has this been? Is it because you're losing a good portion of your fan base, happen to be the uninformed, lifelong people who vote Democratic just because it's been a traditional thing in family and household, or what? And so I look at this, man. I don't buy it, but I thought it was just entertaining just to see them people kneel. Okay, yeah. And so not only are they kneeling, but they're also trying to buy the American people's vote again with a $3 trillion stimulus package, which has a lot of funny things built into it. So question is, any of you watching, the thumbs up, thumbs down, thumbs up, you didn't bite the bait, or you didn't think it was genuine, or thumbs down, you didn't think it's genuine, or thumbs up, you think it's genuine. I'm curious to find out what you guys think in the chat. Let me know. Let me see. So D. Robbie says, can anyone tell me if Deutsche Bank is still around? Yeah, I think Deutsche Bank is still around, and I wouldn't even be surprised. I wouldn't be surprised if Deutsche Bank's share price actually went up. Deutsche Bank could be back on. Let me see here. Let me see, investing.com. I'll go. And so last I heard, Deutsche Bank was not doing too well, but who knows? Tides may have changed. The Federal Reserve might have sent a couple trillion over to them, put them back on track. And so let me see. Let me see if I can find their share price. Deutsche. Let me see. Give me a second. Let me see if I can find Deutsche Bank. Nope, I don't see it. Let me see. Deutsche. Oops. I don't see it. Let me see. Deutsche Bank. They got so many. Let me see. They got so many damn Deutsche Banks over here on the list. So yeah, I don't see it. Let me see. So I got one thumbs up, a couple thumbs down. Interesting, man. So this is what's going on, man. And so I'm gonna finish off this live stream. For those that came in late, I start off by talking about how PhD economist mentions that the only way, according to history, according to his statistics he threw out there, only way we can have a long, sustainable recovery is if we go negative and if Uncle Sam goes aggressive. And so he says, without those two things, what we're experiencing now as a country, uncertainty, chasing a recovery, will be a long-lasting side effect from this current pandemic. So they blame the pandemic on it, as opposed to just the implosion of debt bubbles in general. But so that is what it is. Deutsche Bank is 10.20. Okay, so yeah, last I heard, Johnny, I appreciate you for sharing that. Last I heard, Deutsche Bank had gotten down well below $5. I think it was about $5. And I think it was Martin Armstrong mentioned that once it goes below $6 a share, all hell is going to break loose. And so it dropped below $6 for like a couple hours or a day. And all of a sudden it's back up. So looks like they're getting liquidated a little bit. They're getting a little of that Fed currency. She certainly knelt before the Visa executives. Very true. All right, so let me share with you this last article here. And this is just I think I talked about it earlier, but here's something that I think will be detrimental to all small businesses. And here's one of the fine lines. If you have a small business that would be needing some type of assistance, getting a loan from the Federal Reserve is probably the last thing you would want to do, because the slave is servant to the lender. and the fact the Federal Reserve is lending. And so I heard a commentator mention earlier how the initial PPP program was designed to provide 8 weeks worth of funds for businesses. And if you take care of business, they'll forgive it. You can wipe your slate clean. You don't have to pay it back. And so just as of Friday, the PPPFA was signed, which happens to extend the current loans, forgivable loans that was given out. And so basically what Trump has done is basically said, instead of that 8-week window to provide payroll for your staff and using only, you had to use 75% of the loan to provide for your payroll, 25% for overhead or whatever. He's adjusted that to where now you can use up to 60% for payroll, and then you can use 40% for more of your expenses to keep your doors open, and you have until the end of the year. So basically what President Trump was doing, let me see if I can pull it up. So basically what President Trump was doing was further providing some cushion for himself so that he wouldn't run into, so that he wouldn't run into any issues with small businesses needing more funds directly. And so here is the new act, or the updated version. The PPPFA enacts favorable changes for the PPP borrowers. So here's what's interesting. The Treasury and Trump, all one in the hand, they got in, they shook some things up. They further extended the loans up to 6 months. So that was very smart. And so as of now, as opposed to running out at the end of July, you can now use the funds up until 6 months. So that puts them well beyond November, to where hopefully by this, so it says the PPP loans, the origination of the PPP loan, or on December 31st now. And so it was previously 8 weeks. Now it's 24 weeks. So basically Trump was saying, hey, I want to make sure that these small businesses are in favor of me because I'm extending this and allowing them to get through the rest of the year and this and that, whatever. Not to mention that between now and November, as I mentioned earlier, there's going to be some real issues, which will be based upon, I think, that strike three. I think the progressives, those that are, the globalists, they're going to want to fully derail any chance of Trump having a chance to win, therefore bettering Sleepy Joe's chance of winning. Or if Sleepy Joe happens to drop out, or just he's not cutting it by the end of the summer, he's going to be replaced somehow, some way. So we're going to see some type of craziness happen this summer, head into the fall. This thing, it's hard to tell what it might be, but we're expect something. And so with that, along with that, if you're expecting something, the fallout, I believe, will be reflecting in the equities markets. And so right now, with all the fake Dow, NASDAQ, and S&P, everything is at relative all-time highs. At the same time, not a single person watching me right now might be contributing more to their retirement portfolios due to uncertainty and things like that. I saw articles saying that up to 31 million people have utilized the CARES Act to withdraw their funds or to take out some or restructure their funds. And so that 31 million, it will probably grow. And I hope it grows, because hopefully those people are, I'm not a financial advisor, but hopefully you're realizing that what you got in there will not be there heading into 2021, especially the way they open up these windows and lending and borrow and defaults and stuff like that. But what people are doing, they're waking up. And so as all those funds are being pulled out of accounts or investment accounts, the Federal Reserve is going to have to come in. And that's why they established a total of 11 windows to provide funds for where people are pulling out. The Federal Reserve is just replacing it with legalized counterfeit funds. And so I was talking about something before I went on the rant. Anyway, Spirit King says, I read some article that said half the blacks in the U.S. had no job ATM at all. I don't know. I don't know statistically. I don't know about that. I don't know what the demographic is, but if we go to the U.S. debt clock, we can get an idea as to those, apart from the information provided here, we can get an idea as to who is employed and who's not based upon looking at some numbers here. So we got the workforce. It says, so here's the official unemployed, which happens to be, 32 million. I'm assuming this is up to date, but who knows? The actual unemployed is 33 million. So how you break that down, I don't know. But out of that 33 million, this actually unemployed. And then we have unofficially employed, U.S. workforce, whatever. So based upon that, I don't know what that's worth, but that probably includes retirees or what, I'm not sure. Full-time workers, part-time workers, not in the and so 107 million not in the workforce on top of the actual unemployed. So 107 are the people who, as they say, gave up looking for work. So I'd imagine, that number right there has all types of people included in that. So, but I'm not sure, but that's a great point. I'm not quite sure they actually have statistics that can go down that deep, official statistics. Let me see here. What is that one? Mike, you need to say more. You need to say more as a black man. You're not speaking your mind much. John Adams. Man. Okay, so that's a great point. I appreciate you for sharing that, Mr. Adams. And so outside of last week especially, I'm going to end with this. Last week especially, just going back and forth with family and friends and seeing the high amount of tension in the air. My personal opinions are not relevant to the primary subject matter I talk about here. And so one of the things I mentioned to a lot of my family and friends is that there is definite injustice in all walks of life. The current social, racial issues we face now, even though I think it's good that people are stepping up to the forefront and protesting and demanding change, I personally am not confident that there'll be any type of change that will be substantial for my race between now and the time all this goes under. Because once all this comes to a halt, meaning our monetary system, we're going to have a lot bigger issues than just some crooked cops, killing black people and vice versa. So the overall problems are greater than the distractions that I know that they're putting in front of us, to where outside of me sharing my opinion on the whole matter, when it comes to the racial back and forth, that's going to be something that we all will face from now until the time Christ returns. I don't really think that it is possible for everyone to get together, come together in unity, as if like we're all, we'll never all be able to sit around a campfire and sing Kumbaya and say that there'll be equality in a world that is just flat out. There's no such thing as equality in a fallen world. Like, it's just not something that I feel led or, charged to go out and to become a voice amongst the people. Other than sharing my thoughts and opinions, I'm more so, as the caller mentioned earlier, we have social, racial, we got financial, we got political, we got a lot of issues we got to address. Let's tackle them all. Now I can get on board with that. But right now, when more people are emotionally charged up as to what happened 2 weeks ago and a month ago, I think right now a lot of people are marching with good intentions, but they're not going to be of any good to anybody within the next couple of months to a year, especially, as I'm saying, we got a 6-month window here, because once the financial markets are either allowed to crash as a way of disrupting or transition us to the next system, a lot of people are not going to be concerned with, white, black at that point. They're going to be concerned about the green. What they thought was theirs, they're going to find out is not theirs. And that's where I feel like, that's one of the conversations that we need to incorporate as well. But yet, when people are emotionally involved in a subject matter that's been going on our entire lives, not many people are really willing to talk about political, monetary, type of reform as well. Why not ask for the whole shebang as opposed to focusing on one important issue when you got 3 or 4 or 5 on your plate that you're going to be confronted with, whether you know about it or not? So that's why I don't talk much about it, just because I think I'd be beating a dead horse against the head, because I don't anticipate any substantial change between now and the time we're all confronted with reality of the system we're in. And so until we actually realize that the primary solution of some kind will have to do with our national currency, like if you really want to make a difference, we have to address the fact that both sides of the fight, as far as people orchestrating all this, stand to win regardless. I doubt that the CEOs and the bank, too big to fail banks, are concerned with white and black people marching together right now in the streets. Just because no matter what, once we're done marching, we're going to swipe those debit cards. We're going to hand over that piece of paper. They still get paid. So as long as they get paid, we ain't really disrupting anything, in my opinion. So that's just me. It says, apologies are going to do what? I'm not quite sure myself. And so we spend our lives working, Barbara, and that's a good point. And so that's something I think. So the fact that we all, and it's okay. So earlier, I'll talk about the earlier. I was thinking about, what are some other disruptive things that can be presented? And so one thing that majority of people will not be willing to talk about is the fact that being in this country that we're in, we've been blessed beyond measure to have lived comfortably until this point now, barring 40 million unemployed. The certainties and the loss of confidence in the future promises of pensions and all types of retirement vehicles, those things are on the hook right now. And so until we all come to the realization that there's not going to be that comfortable kumbaya moment down the line, especially if you're a millennial. If you're expecting to retire 10, 20, 30 years from now, the chance of you being able to do that the way that it's been done up until this point is not likely. And so if we can't address the fact that we need to really look ahead and say, more than likely, I'm not going to have the type of future I would like to have because the currency will not be what it is today, more likely. Until we're willing to address the fact that all the things we've been duped into believing is going to be there for us in the future will not be there, we won't really be motivated to make change now. Like a lot of people, if the majority of the people were knew that they were not going to be able to draw on those retirements down the line because of unfunded liabilities and, the central bank balance sheet going to, cause problems. So, even if you withdraw some funds from those accounts because of all the trillions upon trillions that's going to be out in existence, it's not going to really purchase much. So there'll be no comfortable ending to this. So until we're able to address that and say, hey, I'm not really concerned about the future like that. Let me worry about now. And now means that unless we solve these issues we're all facing now, there will be no comfortable tomorrow. And most people are not able to look ahead to realize that their future is not as bright as they think it's going to be. For the simple fact that the Federal Reserve and Uncle Sam have already reached, watch this, they've already reached into your future, into my future, into the unborn's future, and extracted 25.9 trillion, of which the last 16 trillion of that has been in the last 10 years. So imagine in the next 1 year, how it's going to be 30 trillion by the end of this year, more than likely. And so that is your retirement. Uncle Sam already then tapped you out. So yeah, I'm rambling, but I'm going to dial back. But until we realize that there's no comfortable tomorrow, we won't be able to really get mad enough or get pissed enough today to demand full change racially, politically, financially, monetarily, you name it. It's not going to happen. So anyway, so for those that realize that, it's up to you to take proactive measurements to better your life now and for your own future. We know the practical manner is to prepare yourself financially via alternative assets that retain value in times of crises, as well as any type of thing that can add value to other people that you can serve in the form of a business. And then also on the, getting your ducks in order now, using debt to your advantage as opposed to consuming it, stuff like that. So stuff we've already talked about. But anyway, I'm just rambling as always. So I apologize for that. We got MH Cow from Malaysia. Great to hear you continue alerts. More grateful. Thank you. Appreciate you. How's everything in your neck of the woods? Shift before we get to something more stable like bonds. Yeah, bonds will pay out. It's going to pay out as something that depreciates and devalues and all that other stuff in between. So it's going to be some issues with that. But that's to be expected. Wyoming made gold and silver real money. They're working on a cryptocurrency. I don't doubt it. I don't doubt that. So a lot of states will be jumping on board gold and silver. So, of course, you all know what to do. Get your weight up while you still can. Other than that, we're approaching an hour. That's all she wrote for me. I appreciate you guys hanging out with me. If you've enjoyed any of this back and forth, don't be afraid to click that thumbs up button. share this video so people can find out about it. And if you're new to the channel, hit subscribe, hit the bell button so you'll be notified. And then we'll keep moving. Other than that, be blessed, be safe. Be back at it tomorrow. Peace.